What is up, everybody? Before you guys go ahead and watch this next module, if you want to watch me and the team trade live for absolutely free for 7 days, as well as get access to everything that we have within the Learn the Markets Discord community, go ahead and check out the 7 day free trial. If you're not already in the Discord, I will attach a link at the description of this video so you can go ahead and check that out.
Welcome back, everybody, to another LTM Crash Course video. Today we have Module 2, and we're going to be giving you guys an introduction to day trading, but more importantly, covering the markets that you can actually trade, breaking them down individually, giving you guys our ultimate recommendation as to what market we believe you guys should trade based on personal experience and what we trade, but more importantly, give you guys the why behind what we trade, which is the most important thing, and then wrapping it up with some actionable steps that you guys can take this year in 2025 to jumpstart your trading journey. Now, what is day trading? Well, it's pretty self-explanatory, right? You are buying or selling a security within the same day, and you're looking to make a profit from that trade or from that price fluctuation where you took that trade, okay? Now, when it comes to the markets that we can actually trade, we have Forex, which is essentially trading currencies or currency pairs. We have options, which are a type of derivative. They're essentially a contract that allows us to speculate, essentially bet in simplified terms, whether a stock is going to go up or down. Okay. Then we have futures, which is another type of derivative. They're a contract, but they're more closely associated most of the time with things like commodities, right? And then also indexes. So things like ES and NQ, those are the futures version of the S&P 500 and the NASDAQ. Okay. Then we have individual stocks and equities. These are individual shares of a company. These are your Teslas, your Googles, your Apples, Coca-Cola, all of these individual companies that are public companies, right? And then crypto, which at this point should be pretty self-explanatory, right? Bitcoin, ETH, Solana, XRP, meme coins, whatever it may be. Now let's actually dive into these individual markets with a little bit more depth, okay? Now, before we get into it, I just want to stress the fact that a lot of this tends to be personal opinion and from personal experience, okay? So whether I say that I avoid a certain type of market because X, Y, and Z, I'm going to tell you guys the reason and the why behind it, but I highly encourage all of you to do your own research and your own digging, because at the end of the day, a lot of these things tend to be personal preference besides some of the just like factual things about how some of these instruments are actually different, okay? So let's dive into the first one, being Forex. Now, the main reason why I just avoid Forex overall, and why a lot of the traders that I've personally spoken to and traded with personally over the years just avoid Forex, is because of the broker side of things. So a lot of these brokers tend to be offshore if you're depositing live funds, and an offshore broker, right, does not have a lot of regulation. And with that in mind, you're running a higher risk when you're actually depositing live funds into that broker in terms of actually safeguarding your funds and your funds being protected, you know, if you were to compare it with something that is regulated here on the States. So for the most part, I just avoid Forex as a whole. Also, when it comes to position sizing and calculating lots and pips and all of that, like, I really don't understand why you would go with something like Forex on top of all the broker things that I mentioned previously, as well with prop firms. A lot of the prop firms on the Forex side of things tend to be unregulated as well, give or take a couple, two big names that have been around forever and have a really, really, really good established reputation. But for the most part, with these downsides of Forex, it just makes so much sense to pay attention to some of these other markets that are so much more efficient, regulated, and in terms of, like, for example, still having the opportunity to go with prop firms to reduce that barrier of entry. You can go with something like futures, and it's, in my opinion, going to be 10 times better than Forex. But we're getting ahead of ourselves. Options, okay? Now, like I mentioned previously, options are a derivative. They're essentially a contract that allows you to bet, speculate whether an underlying stock is going to go up or down. Now, options had a huge boom right after the pandemic. That's actually when I got into options, right during the pandemic, actually, when we had the GameStop and AMC stuff popping off, when you saw everybody on fucking Wall Street bets flipping $1,000 accounts, it's like 90,000. All of that, all those crazy gains that you guys were seeing, that is with options, right? So options give you leverage. They essentially give you larger exposure to potential gains, but that's also a double-edged sword, right, to potential risk as well. And they're extremely complex instruments. I started trading out options, but the reality is, if you're an absolute beginner, there's such a massive learning curve to understanding options, and more importantly, how an options contract is actually priced, where you have to take into account things like the Greeks and then find out what each individual Greek actually means and how it's going to affect and reflect the pricing of your contract. That it's such a big learning curve to actually understand that Now, for the most part, I would actually deter beginners from getting into options because one, there is no prop firms as of yet for options. So there is a capital requirement right there. And it usually tends to be bigger. And more importantly, they're just more complex instruments as a whole that also implicate a lot of more risk. And if you don't know what you're doing, you don't know how they work, you will very, very fucking quickly find out how dangerous they can be in the wrong hands, right? Because a lot of people just be like, oh, bro, trade a zero DTE option, make a quick flip, and it's like, dude, like they don't even know what theta decay is or how volatility is going to affect their contract. So just keep that into account. Okay, they are a more complex instrument. Then we have futures, our bread and butter, and personally, what we recommend all of you guys to actually get started with. They are extremely efficient. Okay, talking about, for example, if we compare them to options, right? Options are extremely complex. They're both derivatives, but options are extremely complex. Futures are super simple. You know exactly, if you're trading ES and NQ, you know exactly what 1 point in ES or an NQ is worth. So you know exactly how much you stand to make, how much you stand to lose. There is no spreads. It's a regulated market, just like options is as well, unlike Forex for the most part with some of these brokers. And it's just such an efficient instrument when you compare it directly to options, since they're both derivatives, that it's kind of a no-brainer to go with futures. No spreads. There's not a massive learning curve to understanding futures. You really just have to understand, like, okay, how much is a point value in ES and in NQ, and that's pretty much it. You know exactly how much you're going to make and how much you are going to lose. And then you also have the opportunity of prop firms, which is super big right now. Prop firms in the future space. You can ultimately leverage prop firms, right, to reduce that barrier of entry for yourself. For example, if you don't have capital, and you can pay a small fee, 50, 80, $100 to take an evaluation with one of these prop firms. And then if you're able to pass these prop firms, you can get funded anywhere from 50K to $250,000 in capital, and then actually get payouts, real money from that. Okay. And it's with a super simple, easy to understand instrument. Once again, we're talking about futures. Then we have individual stocks and equities. Now, there's really not much to say here other than the fact that they're very simple to understand. You know, you're buying a share or multiple shares of these companies. But the thing is, right, you're not going to buy one share of Apple or 10 shares of Apple, and in a 5% jump is going to make you a substantial amount of money. That's the whole caveat with individual stocks and equities. You need a whole lot of capital, a whole lot of money, substantial capital, to actually be able to make some sort of gains where you're actually taking a look at it like, okay, yeah, like I'm making a good amount of money, that, you know, this actually helps, right? And most of you guys, if you're just getting into the space, a lot of you guys don't actually have capital, and you need a fuck ton of capital to actually be able to make some good money with individual stocks and equities, unless you go the penny stock route. And I'm going to completely avoid that for this video because, like, personally, from everybody I've spoken to, like, penny stocks is a whole different side of thing. That is not something that we claim to be experienced on, and we're not even going to talk about it now. But that's essentially individual stocks and equities. The main drawback here is that it is going to take a whole lot of capital to be able to make some substantial sort of gains monetarily wise. Besides that, they're very easy to understand, regulated market, and that's pretty much it. Lastly, crypto. Okay, now when it comes to crypto, I personally like to view crypto more as an investment rather than something that you're looking to trade. That's personally how I look at it and how I like to treat it. Reason for that being is that crypto comes and goes in waves, right? In terms of, there's a lot of volume. Like, for example, now there's a huge hype around it because Bitcoin pushed past 100K, and we had the BlackRock Bitcoin ETF, and there's been that whole narrative around it. So, you know, right now there's a lot of volume, a lot of flow going into the market, and it's super big. But it's ultimately cyclical when it comes to crypto, right? It'll die down when things start going back down. It'll kind of, nobody will really talk about it, and then once it pumps, everybody and their fucking moms and grandmas talking about it. So with me, that's not really something that I'm looking to trade because it's just not nearly as consistent year round, in my opinion, as some of these other things, like, for example, just the New York Stock Exchange with things like futures and options. Like, those are much more consistent instruments that you can trade year round. Once again, from a trading perspective, that's just not how I personally view crypto. But I do know some people that trade crypto. There's like futures leverage crypto that you can do. But once again, do your own research, Not going to be diving into that because that's just not something that we've personally seen a lot of, nor that we've done ourselves. Okay. That pretty much sums up this video. So just to recap the overall recommendation, right? Futures are the most efficient, simple to understand instrument slash market out of the ones that we traded right here. Individual stocks are also easy to understand, but once again, the caveat with that I mentioned is you need a whole lot of capital. And since a lot of you guys, since this video is catered to beginners, I'm guessing a lot of you guys are young and may not have capital to invest in terms of live funds that you can risk to lose. Futures, prop firms, efficient market, easy to understand, with the opportunity to reduce the entry of barrier where you're now getting funded capital. 2 + 2 is 4, boys. Like it's literally a no-brainer. It's a no-brainer. Okay. Futures are extremely efficient, easy to understand. You know exactly how much you're going to make and how much you stand to lose. Okay. You don't have to worry about spreads. The prop firms around the future space, for the most part, are really, really solid as long as you're sticking with reputable firms. Okay. So it's right there. The opportunity is there for the taking, even more so with props. Now, I know for a fact that a lot of you guys may be asking, like, okay, what props? These props. So I've personally traded with 2 of these prop firms, but I know people that have traded with all 3, and we have people in the group that have traded with all 3. So I highly recommend on the future side, if you guys are interested in prop firms to look into My Funded Futures, look into Apex Trader, and look into Top Step. These are the 3 most reputable firms when it comes to prop firm on the future side from what I've personally traded. I have not used Top Step, but I have used My Funded Futures and Apex. But I do know people that trade on Top Step with their XFAs and actually make use of the Top Step X platform. Okay. But with that being said, that's essentially going to wrap up this video. We have covered everything that we needed to, and we are now ready to start diving into the technicals. So I will see you guys in the next module. As always, stay safe, stay blessed.